Fintech companies are no doubt the future of the finance industry. If there's anything that business owners should have learned by now, it's that if you don't keep up with the times, you'll get left behind. Joining the trend in the finance industry are two of the most prominent fintech companies today, SoFi Financial Technologies and Varo Money. These two companies are primarily located in San Francisco, California, and both are serving to help their members with their financial matters. With the surge of fintech companies here and there, it's very important to know which ones are serving the greater good and which fintech companies are living up to their promise of helping people reach their financial goals. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and news. If you guys like that type of content, don't forget to like and subscribe to be notified as soon as we drop new videos. Also, please note that we are not financial advisors, so please always do your own due diligence. Shout out to our top comment from Azar Khan. Thank you for watching and leaving a comment on many of our videos. We appreciate it. In this video, we'll talk about two of the most promising startup fintech companies, Varo Money and SoFi, and go over their business strategies and find out if one is getting ahead of the other. Varo Money, famously known as Varo Bank, is the first ever fintech company to be granted a bank charter by the Office of Comptroller of the Currency. SoFi, as known as SoFi Wi-Fi by RM of BTS, is awaiting its bank charter approval, and this could happen anytime before the year ends. Varo Bank helps their customers save and manage their money by offering premium bank accounts that have no minimum balance requirement or monthly account fee, high interest savings accounts, and tech-first features. Here's jolly old Colin Walsh talking about being a pioneer in the fintech bank space and why he started Varo Bank.
I want to share with you why I started Varo a few years ago. I'm a 25-year veteran of the banking industry, but I consider myself a reformed banker. My time working in banking was a valuable experience. It gave me a front row seat to see that the system works really well for people who have a lot of money, but that's about it. So why don't the banks serve most customers well? Well, when you think about it, the cost of all of that real estate and running those branches and handling cash and having cash vaults and armored vans that are coming to pick up the cash, there's just a lot of expense. And unfortunately, the only way the banks make money on most people is through fees and charges. Now, this is where a purely digital bank has a big advantage. It's designed to be much more efficient, and it doesn't carry all of those costs. I knew I had to put my inside knowledge to work, so I left the big banks and called my friends working in technology. I wanted to build a better way for everyone to bank using the latest technology that was faster and safer, had better customer service and better products, and a better business model that was not based on fees, but on helping customers succeed. So we created Varo. We're already 3 years into creating the next generation of banking.
Wow, that's probably the friendliest guy I've ever seen in my life. Comment down below if you feel like Colin Walsh is actually the missing twin of Gordon Ramsay, or could it be that Colin Walsh is actually Gordon Ramsay undercover? Varo Bank offers full service banking with no monthly fees, and they also have a savings account that lets their members automatically save their money at high interest. They have Varo Advance, a service that enables their members to get a cash advance up to $100 without unexpected fees and interest, and they also recently launched Varo Believe as a part of their offerings where members are able to create a new way to build their credit score by just buying groceries or dining out. While Varo Bank focuses on saving, lending, and creating a new way to build credit scores for their customers, SoFi offers a wider range of products that makes it more beneficial to people who are trying to get their money right. SoFi, on the other hand, is a one-stop shop that offers products for borrowing, saving, spending, investing, and protecting their members' money. SoFi went public last June 1st, and this gave SoFi a bigger opportunity for expansion as institutions, retail investors, and even insiders came loading the boat. Varo Bank is still a private company, but investment management companies like Berkshire Partners / Stockbridge, BlackRock, the Rise Fund, and many more companies have been helping Varo in funding its business plans for growth. When he's not in Los Angeles dunking the ball with LeBron, NBA player Russel Westbrook is slam dunking $63 million investments into Varo Bank. In its latest press release, Varo states that 13 months after obtaining its bank charter, Varo has doubled its opened accounts to 4 million. Furthermore, the company has tripled its revenue. It has also unlocked new cost efficiencies and expanded its suite of innovative financial products. Since Varo is still a private company, there's no way to verify this information fully. Is this all cap? I guess we'll find out when they go public. According to this article on Forbes, Colin says Varo will surpass $100 million in annual annualized revenue this year and expect to become profitable by mid-2023. He said he'll start to seriously consider going public in the next couple of years. On the other hand, SoFi's market cap when it went public in June 2021 was 8.65 billion, and today, after almost 5 months after it went public, SoFi's market cap is valued around 16.57 billion at the time of making this video, almost doubling their company's market value in less than 6 months. Last August 12, 2021, in its Q2 2021 results, SoFi reported a total year-over-year member growth of 113% to 2.6 million, also doubling the number of their members in a year. This, considering they don't have a bank charter yet, represents a huge growth. SoFi is led by its CEO, Commander Noto, and Varo Bank is led by its CEO, Colin Walsh. Both of these men have been exposed to the financial field for almost 25 years. Aside from his role at Varo Bank, Colin Walsh is also a board member of Friends of the British Film Institute. Colin Walsh has worked for American Express, Lloyd's Banking Group, Council of Mortgage Lenders, Visa Europe, Executive Network at one point in his career, and he also worked for Wells Fargo as an executive vice president for 9 years. SoFi CEO Anthony Noto, on the other hand, worked for Twitter as a chief financial officer and chief operations officer. He also played a vital role in the growth of companies such as Goldman Sachs, Kraft Foods, Lehman Brothers, and the NFL. It's going to be interesting to see how these men apply what they've learned from those years of experience in the companies they used to lead. To sum it all up, both of these companies are experiencing growth in their valuation, membership growth, and the products and services they offer. We have to take note that SoFi is a public company awaiting its bank charter approval, and Varo Bank is still a private company that is planning to go public and the first ever fintech company to get a national bank charter. What's next for these SF-based fintechs? We actually grew up in the Bay Area, so it's exciting to see these two SF fintechs killing the game. Who do you think will take the throne between these two? Comment down below who you think will make a better impact, and we'll post a top comment in an upcoming video. As always, thank you guys for watching, and until next time, peace.